will be asked to come in and consult on security, trying to identify vulnerabilities before these products come out.
Okay, so Adam, let's bring it back to Dominic specifically in this particular lock. So he finds this vulnerability with a zip tie and reaches out to the company. That's not recently. That happened a while ago. So bring us up to speed on what happened.
Sure. So he discovered this vulnerability while he was working in his basement workshop last summer. He contacted the company right away within a few days. And the company really, for the most part, did the right thing by him. He worked with somebody who was a head of cybersecurity and engineering at the company. They worked to actually develop a retrofit that would address the problem, and consulted on designing or a redesign of the lock that would also fix the problem in future models. So that took some time, but then things sort of just dropped off the radar over the summer.
All right. It's an incredible read and remarkable individual. So glad we got some time with you. Adam, thank you so much. Adam Bluestein, Business Week freelancer reporter and contributor. Check out his story in Business Week, and Bloomberg Business Week editor Joe Weber on the Access line in Brooklyn as well. All right, folks, you are listening to Bloomberg Business Week. Check on the markets with our TV colleagues in just a moment. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close. Just 60 minutes left in the trading session. Caroline Hyde, Taylor Riggs, Shanali Basak, joined now by our colleagues. It is Carol Massner and Kriti Gupta. We together welcome full coverage
it's
across
Ladies'
our
Day.
TV, radio, YouTube. It is Ladies' Day. And Carol, I mean, what, again, this desire to be risk on as we head towards the holidays.
It's pretty remarkable, right? I think it's been a remarkable year. There was an interesting column, though, I think it was maybe Joe Weisenthal and team saying, though, if you look at a lot of asset classes, a lot of the gains were actually earlier in the year, and then we had some kind of churn back and forth within a range. But it is remarkable to see that, even with Omicron concerns, Kriti, that we're continuing to see gains on the equity side of things.
Yeah, absolutely. The market's really just in cruise control here. I mean, it's kind of makes sense that given just the past couple of volatile weeks, I want to say, going to Black Friday, that's really where you've seen a lot of the pain. I mean, that's really, like I said, the cruise control aspect that you really want to keep your eye on.
Don't tempt fate, Kriti, because it was, but on Monday we were talking about the sell-off, and then suddenly we get quite the whiplash of the back of the mood music changing. I'm looking at volumes down significantly, though, as we look at the S&P 500 up 0.7%. That's 33 points for our radio audience. We're up 123 points on the NASDAQ, big tech having a good day, up 0.8%. And the Dow, also the cyclical, is still in vogue, with up about 0.5%. But volumes across the board down about a quarter compared to your usual, Shanali.
Yeah, and let's take a look at the sectors, because we do have green on the screen. It's not by too much, but we do have most of the sectors higher. We have consumer discretionary really leading the way there. You talked about that Tesla jump today. Information technology up less than 1%. Healthcare up less than 1%. And the smallest gains are really in those industrials, utilities, consumer staples today.
It really is that discretionary, I think, that Caroline, you and I have been looking at all day as well. I'm so glad that you bring that up. There are some individual movers as well that are really moving as we head into this. CarMax is lower by about 6.5%. There's a third quarter EPS and sales improvement here relative to estimates, but RBI analysts said that they are still very much worried about margins. So that, of course, is a key concern. Take a look. I had to do it. BlackBerry. I know it's only up about 2%, but the fourth quarter guidance really doesn't look good. TD Securities said that the backdrop, it's stabilizing, but it is just so volatile for this company.
Do you want to tell Carol why we have to do BlackBerry?
I mean, how do you beat this keyboard, Carol?
I gotta say, I still miss my BlackBerry.
You can get one.
Taylor still has one for our radio audience. She's showing hers off right now. Rose gold.
There's a keyboard.
Oh my God, look at you.
Should we? I know. The control room is going to kill me. Get back to Tesla, if you guys quickly here. We'll get back to some of the movers. Investors are actually really, frankly, happy, right, that Elon has stopped selling, right? And so Tesla at least is up about 7%. And I leave you here, Carol, just with Apple. Yeah. We were talking about $3 trillion, and it just hasn't gotten there.
No, it hasn't gotten there. What's interesting, too, among those consumer discretionary guys, did you notice all of the travel stocks, whether it's Royal Caribbean or Carnival? Carnival's been on a tear in the last 2-3 days. I mean, just continuing to tick higher. I find it interesting that even though we see the Omicron headlines, we see the cases coming up, and I know we've got more ways of dealing with it, and this isn't as virulent, if you will. Nonetheless, to see Expedia, Norwegian Cruise, like all of them, Hilton Worldwide, Marriott, they're all on a tear.
Well, maybe with that Pfizer news, the fact that we're going to have another way of treating that COVID pill being endorsed as an emergency basis here in the US, that also may be feeling that these areas have been beaten up too much. And talking about being beaten up, we just want to go back to what Kriti was talking about, the fact that we have seen basically a little bit of calm after what is generally big gyrations in this market. Just 2 days since Black Friday, where the closing bell change was less than 0.75%. 11 of those 18 days, we've had at least a 1 percentage point swing. These are big moves.
Those are big moves, right? Everybody was talking about more volatility coming to the market. Traders have been happy to see those big moves, and we definitely have seen it in terms of volatility. When it comes, though, to COVID, our team caught up with the CEO of AstraZeneca and talked about when it comes to the virus, how maybe it becomes a kind of more normal part of our life, almost a routine part. See what he has to say.
It's likely that this pandemic will be endemic over time. I mean, it is already more or less endemic in some geographies in the world, which means it will be like the flu. It will come back on a regular basis, and people may have to be vaccinated. Now, the question is, do you need to be vaccinated every year, every 2 years? We don't know that, and it will depend on the durability of these vaccines.
And that's the AstraZeneca CEO, Pascal Soriot, catching up with our Bloomberg TV team. I mean, guys, right, if it becomes just routine, like the flu, and we're getting a vaccine, maybe next year feels, Shanali, a little bit more normal.
Yeah, a little bit more normal. And as far as volatility goes, we know now that the market can stomach a VIX between 20 and 25, and we are not at that level today. And the question is, does it start to jump much higher next year because of the Fed more than anything else?
Yeah, well, between that, we have a very crucial week, and that is, of course, a Santa Rally week. This is a week that shouldn't usually matter.
Did you say Santa Claus rally? You really went there, didn't you?
I did, but it's important. It's important that we talk about this because this is a week that a lot of investors take for granted. They close their portfolios, they hang up their hats, they say, I'm going to see you in the new year. And then you might potentially have a repeat of what you saw in 2018, which is higher monetary policy shakes up the markets. Are we going to get there? That's an answer I don't have for you today. I have it for you potentially on Monday.
Well, when you talk about monetary policy, it was interesting. We were having a conversation earlier on the real yield program about slowing growth, and yet it's still at a 3 handle. We've talked a lot about that Goldman Sachs call of, again, a little bit slower, but still high. And earlier this year, we'd had some hints of a stagflation conversation. I think that has totally been out the window. There's no conversation of a stagflation with GDP with the 3 handle.
Tell you what we're not having a conversation enough about, as well as these Fed picks. Aren't we meant to be getting them before the end of the year?
I can't wait.
Well, we did see a headline, right, come out of the White House press briefing, right, that there's going to be no more information, at least at this point.
Yeah, I don't get it. I don't know the hang up.
He's been busy, COVID, other things.
Lobbying.
Build back better.
For
Lobbying.
the top roles.
But it's a good point that in terms of the composition of the Fed, right? And this is something Michael McKee has talked about, that when we look at the dot plot, you know, individuals who might not be there next year when the ultimate decision making is done. This is why, Caroline, this can be really important.
Will be a focus also for the banks, and we think about how some of the financials are performing with basically a range-bound yield curve at the moment. And we're going to be talking a lot more throughout this program a little bit later and into What You Miss on TV about, well, the angst going on among some of the central bank, some of the investment bankers in particular, all that money, and they can't really crow about it right now, Carol.
Oh, that's a tough problem to have, right, guys? I'm just going to, I don't know. I'm going to get in trouble here.
Violence.
But it is one of our most read stories on the Bloomberg, and you're right. Like, this is the thing with all this tension, with all this volatility. You know, Chanel, you mentioned the VIX. Taylor, right? We look at it, you know, nonetheless, we've seen some record days on Wall Street. All right, folks, we got to run. We're going to come back, though, at 4 p.m. Wall Street time. Our TV team, our radio team, and YouTube will be there for Beyond the Bell, counting you down to that closing bell and to the market close on this Wednesday.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Business Week. Carol Masser along with Kriti Gupta, and of course just wrapping up some coverage on the markets with our TV team. We'll come back to them at 4 p.m. Wall Street time for Beyond the Bell. But it is interesting, Kriti, you know, you look at some of the names, those consumer discretionary, that's the group that's leading among the major industry groups in the S&P 500. Tesla at the top of that list, but that's what's really helping provide momentum in today's trade.
Yeah, I mean, momentum, if that's what you can call it, right? No real conviction here, but it really is cruise control, and I keep using that phrase because it does seem like the market, or at least the investors, have kind of tuned out a little bit. It's those folks that, you know, already used up their vacation days. They're the ones that are at the desk. But clearly a very defensive bid, totally normal to see that ahead of what's supposed to be a thin volume, thin liquidity couple of days.
Well, it's been interesting to see things, whether it's Davos being, you know, stopped, whether it's the JP Morgan Health Conference, they're just putting it out. Like, we understand how this plays out, right? We understand how it can be. And the real concern here is about your community, about taxing those healthcare systems so that maybe people who walk in with some serious ailments, not COVID related, can make sure that they get care. Like, we understand how this goes and how we can kind of help reduce those numbers or rein it in, right? People going home, people working from home. We've seen it move pretty quickly.
Yeah, and what's crucial here about just kind of the changes that you're going to be seeing perhaps in the next couple of weeks is how the Biden administration actually starts to tackle that. And that's something the markets are going to be so responsive to because this kind of pivot that we've been talking about all day, Pfizer, Moderna, this idea that you're going to use antiviral pills or cocktails to actually target this instead of really kind of double dosing on the vaccines, that's going to be crucial for the markets.
All right, right now we've got the S&P 500 up 34 points, the Dow Jones Industrial Average a gain of 191 points, and the NASDAQ, the outperformer, certainly on a percentage basis, up almost 0.9% for a 130-point gain. You are listening to Bloomberg Business Week right here on Bloomberg Radio. All right, you are listening to Bloomberg Business Week. Carol Masser along with Kriti Gupta. And interesting in terms of one of the things I like to follow, and Bloomberg Terminal users also do, is anything and everything to do with real estate. And this story certainly popped up on our agenda, written by Bloomberg's Patrick Clark. and it's about a massive office tower taking shape next to Grand Central Terminal in Manhattan. Latest evidence that the pandemic has not diminished the real estate industry's appetite for city-shaping projects. You remember, like, going back to the early days of COVID, and everybody was leaving the cities and buying properties out in, residential areas and getting out of urban areas, and they were like, the city's dead. This is a sign that
they were going to say Miami is the new New York City and everyone is leaving. But, we have some news for you. They're not, actually. You are starting to see these massive real estate investments, and a lot of this is, of course, coming from major corporations. So the question here is, first, you have the real estate. Does the labor, does the hiring follow, and then, of course, bring more folks back into the city?
Well, and it's interesting. I mean, and keep in mind that some of these large large commercial real estate projects are often in the works for a long time. You've got to get permits and all these different things. But anyway, RXR Realty and TF Cornerstone, they're planning for a 1,575-foot tall tower. It would be among the city's tallest, recently approved by the city council here in New York City, clearing the way for a mixed-use building on the site of a Grand Hyatt that includes more than 2 million square feet of office space and up to 500 hotel rooms. So it's going to be dubbed 175 Park Avenue. So we'll be looking for that to pop up on the New York City skyline. All right, you're listening to Bloomberg Business Week. Carol Massar along with Kriti Gupta, and this is Bloomberg Radio. All right, you're listening to Bloomberg Business Week. Carol Massar along with Kriti Gupta. And we mentioned, if you look at the 11 major industry groups in the S&P 500, consumer discretionary is at the top. And Tesla is certainly the number one gainer among that group. It's up about 7% as we speak. And we've been watching, it's been interesting to kind of watch Elon Musk, especially as he continues in terms of buying back his shares.
Yeah, and what's crucial is we were just talking about real estate in New York City, and here we are completely forgetting about Austin, Texas, which is also another major booming city that you're really seeing. I mean, speaking of Elon Musk, he just says he lives in a $50,000 house, but does not talk about his mansion in Austin. Listen, I grew up in Texas. I grew up in Dallas.
There's a lot of big houses in Texas.
There's a lot of big houses, but the cost of living is so low. Right. To afford that kind of real estate in New York City, I'd have to be a bajillionaire.
You grew up there. I have a lot of family in Texas, and I remember growing up, and just even more recently, as we've all become adults and own property, the difference in what you pay in taxes here on the East Coast versus what they pay for a lot of house. It's pretty remarkable. This story though was fun. They talked about, this is from Dow Jones and Wall Street Journal, that when Time Magazine last week named Elon Musk Person of the Year, it painted a Spartan picture of his living arrangements, and it said, this is how the piece began: the richest man in the world does not own a house. And then he said, my primary home is literally a $50,000 house in Boca Chica Starbase that I rent from SpaceX. He tweeted this back in June.
Learning so much about the Elon Musk lifestyle. Renting from SpaceX,
like a small
which
home?
he owns.
Like a small home? Is this what this is?
I suppose so. Sounds like a nice life. Let me just tell you, especially when it comes to, say, the weather. He's referring to, of course, a Texas town near the Mexican border that is near the SpaceX's rocket launch facility. He says it's kind of awesome. Well, let me tell you, Carol, it's cold here. The weather down there is kind of awesome.
It is kind of awesome. Yeah, I was going to say it's a lot warmer than what we see here. Anyway, interesting from Dow Jones in terms of where he's living in Austin. You're listening to Bloomberg Business Week on Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Very light pre-holiday trading in the equity market today. We are at higher levels, very near the best levels of the session. Let's get you caught up on the most recent price action as we cross to the Bloomberg Macro Squawk Desk in Bailey Lipschultz. Hi, Bailey.
Hey, Doug, as you said, stocks are trading higher in a very quiet session. The Dow is up 215 points, S&P higher by 35, with the NASDAQ rising 140 points. The U.S. 10-year yield is unchanged at 1.46%, and small caps are up 10 points. All 11 S&P sectors are trading higher, led by gains in consumer discretionary and technology. NASDAQ biotechs fall 20 points, transports dip 40, semis are up 15, while the VIX is lower by 8%. Leaders in the Dow, Caterpillar, United Health, and Microsoft, while Nike, Honeywell, and Travelers are among the handful trading lower. Amazon turned lower on a report its cloud unit is drawing antitrust scrutiny from the FTC. Pfizer gained after its COVID pill was cleared for emergency use here in the U.S., sending Moderna lower by 8%, while hotels and cruise stocks are on pace for the highest close in more than a month. On the earnings front, Paychex rallied after boosting its full-year earnings forecast. CarMax fell after its margins contracted, and Cintas dipped after a margin miss of its own. Wrapping things up, Tesla jumped more than 8% to bring its value back above $1 trillion. Live from the First Word Breaking News Desk, I'm Bailey Lipschultz. Doug?
All right, Bailey, thank you. And if you have a Bloomberg terminal and you'd like live audio updates, the function is SQUA, then the green go key. I'm Doug Krisner, and that is your Bloomberg Business Flash.
All right, Doug, thank you so much. Carol Master, Kriti Gupta in for Tim Stenovic, who will be back tomorrow. You're listening to Bloomberg Business Week. So really great to have our next guest here. Shares of Connect One Bank, I don't know if you've noticed, they've been on a tear this year, rallying more than 60%, hitting a record high just about 1 month ago. For some thoughts on the year that was and what to look out for in 2022, we are delighted to have with us and back with us Frank Sorrentino, Chairman and CEO at Connect One. And they are a small cap, publicly traded, community-based bank. They're located in Englewood Cliffs, New Jersey. Hey, Frank, how are you?
Good, Carol. How are you? Hi, Kriti. How are you?
Doing well.
Thanks for joining us.
Yeah, it's good to have you.
My pleasure.
So, how do you look back at this year? What stands out?
Wow, what a year it was, right? We started the year in such an uncertain place. Yeah. The economy was basically frozen. We saw our clients scrambling for how they were going to get to their next milestones. Were they going to be open? Were they going to be closed? Who was not working from home? Who was working in the office? But as the year progressed, we certainly got a lot of clarity. Certainly the Federal Reserve stepped in, the administration stepped in and supported, all of the small businesses across the country. And we really saw a tremendous, uptake in business activity as the year, progressed through the middle part of the year. And, even today, although, this Omicron...
Well, wait a minute. What kind of activity? Did you see a lot of small business activity, lending, home? Like, what was it that you saw specifically throughout the year?
Well, look, a lot of our small businesses really have done quite well. Mm-hmm. Construction, which is a big part of our business, as you know, was really almost came to a screeching halt in 2020, but roared back in the middle part of this year. Supplies began to open up, and there's just been a tremendous amount of activity with all of our, construction clients. A lot of our small business owners, restaurants, different types of small business owners also saw a real ramp up. The biggest challenge they faced, obviously, was labor and, supply constraints. But I'll tell you, there was more business to do than most of our businesses were able to provide due to some of those shortages.
Wow.
How much of a hindrance is that, though? I mean, in the construction space, let's take that as an example. We know building costs are surging. We know that they're rising very quickly. How much of a hindrance is that into just kind of this activity, into continuing? If prices are rising, do people say, stop, hold on a second, let's hit pause until prices calm down? Or is there such a need for it that they just kind of move on ahead?
At Connect One, with the businesses that we deal with, we definitely see, two tales here, or two stories. One is that there has been an ability to pass on increases, through to the ultimate consumer. And part of that is because just about everybody in the chain has seen their income rise. They've been talking, the administration's been talking for years about a higher minimum wage. Well, we didn't need that in 2021. Businesses actually had to raise wages for all levels of employees and staff. And that in turn allowed those folks to be able to afford more, whether it was rent or house or going out to dinner or whatever. On the other side, however, we did see a number of our businesses at Connect One think about how to provide a different level of service to lower the price. So a great example is in a restaurant, they're reformatting menus and size portions and, how they're thinking about what they're going to serve in order to meet a certain expectation for an average check. In the construction industry, we're seeing similar things that contractors and developers are trying to value engineer projects so that they can deliver a project within the same sort of budget, but maybe using different materials and different ways of doing things. Now, a lot of that is accelerated through technology and whatnot to try to keep those costs down. But across the board, there have definitely been price increases that have been passed through.
Hey, Frank, we've got a little bit more time, then we're going to do some news and then come back and talk some more. But how would you describe the economy? Do you feel comfortable with growth and that inflation will normalize? Or are you a little nervous going into the new year?
So I'm always a little nervous. It doesn't really matter. But yes, I think that there's definitely some inflation that's there. And I don't know if the right word is transitory or not.
Yeah.
But there's a component of it that is just a reset in the economy. And I don't think that reset will occur again in 2022. I think that, the resetting of some level of pricing has occurred. And we'll move on from there. But there's definitely some inflation that's creeping in some areas, and I think some of those areas are labor related. And I think we will see some tail-on effects as we move into 2022.
All right, sit tight. We're going to do a little bit of news as promised, Frank, and then we'll come back to you and continue. Frank Sorrentino is going to stay with us, Chief Executive Officer at Connect One Bank, traded on the NASDAQ under the ticker CNOB. As I mentioned, stock's up more than 60% this year, so it's had quite a run. We'll continue with him in just a moment. You're listening to Bloomberg Business Week. Kriti Gupta, Carol Masser. This is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed. This is Bloomberg Business Week on this Wednesday, December 22nd. Carol Master along with Kriti Gupta. We're going to continue our conversation with the CEO of Connect One Bank, Frank Sorrentino. We'll get back to him in just a second. Right now, though, we're going to get back to Doug Krisner with a check on that trading day. And Doug, maybe not a lot of volume, but nonetheless, stocks are higher.
Yeah, a lot of positivity, and I think some of this is linked to news, positive news indeed, on when it comes to the virus. Two studies today, one in Scotland, the other in South Africa. Both have found the risk of hospitalization from the Omicron variant is far below the risk when a person is infected with Delta. And then on top of that, today the FDA issued an emergency use authorization for Pfizer's antiviral tablets. This will be to treat mild to moderate cases in adults and pediatric children. Pfizer shares higher, but well off the best level of the day, a gain right now of about 0.8%. The CEO of Delta Airlines, Ed Bastian, was urging the CDC to cut in half the isolation period for vaccinated people who catch COVID-19. This is according to Dow Jones. If you look right now at what's going on with the airline group overall within the S&P, higher by 1.5% today, and then the hotel, resort, and cruise line subgroup is up by more than 2%. The FTC is said to be pushing forward with antitrust scrutiny of Amazon's cloud computing business. Amazon shares right now weaker by about 0.2%. We have the Dow ahead 0.6%, S&P 500 higher by 0.7%, and the Nasdaq comp rising 0.8%. 10-year Treasury now with a yield of 1.46%. I'm Doug Krisner. That's your Bloomberg Business Flash.
All right, got it, Doug. Thank you so much. Carol Master along with Kriti Gupta right here in our Interactive Brokers studio. Still with us is Frank Sorrentino. He's Chairman and CEO at Connect One. As I mentioned earlier, it's a small cap, publicly traded community-based bank located in Englewood Cliffs, New Jersey, so just outside New York City. And the stock has been on a tear, up about 62% so far in 2021. We're talking about a little bit of a look back and a little bit of a look forward. So, Frank, if you look into your crystal ball, based on the trends that you're seeing here as we get ready to wrap up the year, how would you describe the economic environment? You said, you're always scared, always worried. You've got to be, right, if you run any kind of company. But how would you describe maybe the economy as we get into this new year?
So if a week ago or 2 weeks ago, I would have said I was pretty bullish about 2022 and the prospects. There's so much liquidity in the marketplace. There's a lot of pent-up demand. Businesses have reformatted themselves for the future. We've done 10 years worth of innovation, in the last 18 months relative to technology and other business processes. And so I would have told you I was incredibly bullish. I'm a little less so today because of this Omicron variant, which is definitely having an impact as we move into the latter part of this year. I think it'll be short-lived. I think my bullish sentiments will remain. I do think businesses will have the opportunity to show themselves as we move into the early part of 2022. I think there's a strong demand for new housing. I think people are just dying to get out to buy new things, get the cars that they wanted. All the supply constraints I think are going to start to break free as we move into next year. And so I think 2022 is going to be quite a good year.
Yeah, I want to ask you as well about kind of decelerating growth a little bit, because this is going to be a major theme that we've kind of recovered from this 2020 pandemic year. 2021 has kind of been this boom recovery, whether you talk about it in the markets, whether you talk about it in the underlying economy. More people are taking trips, more people are traveling. What is that kind of outlook for 2022 when the assumption here is that, yes, we're going to be growing, but at a slower pace? How much of a problem is that?
I don't think it's that big of a problem. I mean, certainly the Fed is keeping an eye on where things are going. They're quite data dependent. They are looking at, where things are headed relative to how much stimulus they're either going to put into the economy or withdraw from the economy. I think that's something we're going to have to watch. It doesn't appear to me that they're going to move too quickly. Certainly, they've sped up some of the reduction in stimulus via the taper. But when you really think about the economy in 2022, moving into 2022, and you think about people's spending patterns in 21, we really have not seen the full effect of all the liquidity that was brought into the economy. We have not seen the full effect of many of the things that people just couldn't buy because they were supply constrained, or the sensation that they've had all the experiences that they want going forward. I mean, Broadway just recently reopened, large venues just recently reopened.
And closed again.
I think there's a lot. Well, right. Yeah. And I think we're going to see a little bit of that, right? Yeah. We've spoken to some of our clients, in the transportation business or whatever, that have seen a little bit of a slowdown now this week right here because of, the events due to COVID. But I think those things are going to, sort of wear off as we move through January. And I think people have savings. People want to spend. There are things people want to do that they haven't been able to do, and I think we're going to see the benefit of all that in 2022.
Hey, I have a question for you. You wrote about this for Ford. You talked about some of the trends that we would see in 2022, and you talked about consolidation. What might that mean for a bank like Connect One? Is there an acquisition in your future, perhaps someone targeting you, a fintech perhaps? And I'm just curious if you guys are holding any conversations or thinking about this.
Well, yeah, it would be hard for me to say.
It's just between you, me, and Creedy. It's
right.
Very,
but
very intimate circle.
Connect One's had a history of participating in acquisitions. We did a merger of equals. We did 2 whole bank acquisitions, and we actually did an acquisition of a fintech company. So we certainly have a history of doing it. I think there's going to be a lot of opportunities in the future for many banks across the country to take advantage, either with fintechs or within the banking space themselves. And I think we've already seen some evidence of fintechs that want to enter the banking space. That's a very touchy regulatory subject. But clearly, what's going on within banking is also going on across the entire economy, and that is you need scale today to really make a difference, to take advantage of the latest and greatest technology, to be able to really serve your clients in the way that they want to be served. I think you're going to see companies, we're seeing it within Connect One ourselves. Some of our clients are merging, or part of the lending we do is to purchase other companies, for our clients to purchase other companies. So it's not just relegated to the banking space, but as I said, Connect One has been a participant in the M&A activity that's gone on. And that, certainly will be part of our business plan going forward.
All right. Well, we look forward to talking with you in the new year. Happy holidays. Happy New Year. Merry Christmas, Frank. Be well and take care and stay safe. Frank Sorrentino. He's Chief Executive.
To the both of you.
Thank you. Chief Executive Officer at Connect One Bank, joining us on the phone from Englewood Cliffs, New Jersey. I love talking with him. I love community banks. I love regional banks. They just give you this great snapshot of what's going on, I feel like, in the real economy in real time. We got to do your chart of the day. What do you got?
Yeah, let's talk chart of the day. We were talking about commodities with Frank. We were talking about building materials really rising. One of the things that is so common when you're coming out of recession, which we are, of course, is that oil demand story. And oil we like to look at as a proxy for how much the economy is growing, not just here in the States, but around the world. So I decided to do a little bit of a walk back in history, looking at oil demand, not just from this year, but actually in what it looked like post the global financial crisis. Turns out it took 2 years since the March 2020 crash to really make up all of the oil demand that it took 10 years to build up. That's a recovery that we have not seen at any point in history. And this is a conversation very similar to what we were talking about in stocks back in the day when stocks recovered all of their gains in just 5 months, the biggest historical recovery. And that's something you're seeing in the oil market as well.
But we can understand it. Like, I do wonder how history books are going to look at it. But we can say, well, yeah, you shut down the economy, everything falls off a cliff, and then you literally figure it out, and we restart it, and it's a bounce up. So it is. I do wonder, like, when we get 10 years from here or 5 years, and you look at that long chart, like we'll be like, oh yeah, well we know what happened. Everything shut down and then everything kicked up again,
and
right?
it's a totally new story. We've never dealt with a kind of a pandemic before, so this is going to be new.
No, and this is why how we come out of it, right? How much does ultimately come back, whether it's demand, whether it's labor, a lot of questions. All right, good stuff. Kriti Gupta, of course, staying with me, my co-host here on Bloomberg Business Week. Coming up, we're going to count you down to the closing bell on this Wednesday. You're listening to Bloomberg Radio. All right, you are listening to Bloomberg Business Week. Carol Massar along with Kriti Gupta here in our Bloomberg Interactive Brokers studio. And one story that definitely caught our attention, and this has to do with student loan payments. This, I think, actually hit the Bloomberg a little bit earlier, and I think it might have come out of, was it the press conference maybe?
I believe so, yeah.
That Jen Psaki was doing out of the White House. President Biden extending the pause on student loan repayments by another 3 months as the U.S. faces a fresh wave of COVID-19 cases from the Omicron variant. The move on that happened today, taking the moratorium through May 1st. And so, again, it's the programs that are coming out of the administration to help people manage their way through the health crisis.
Yeah, and that gets even tougher as you start to see variants really come about, because this is no longer just a 2020 story. This is a story that's going to extend now 2 years going out and from that initial first pandemic. The question is, at what point do you start to see that balance where you do have an environment that even gig economy workers, which often encompass a lot of students, can actually make those payments even in the face of, say, variants that do have this kind of lockdown, shutdown, restriction kind of environment that they're living in.
Student debt's a tricky one. I remember 7, 8 years ago, 90. I remember when that headline came out about, $1 trillion that student loan debt was surpassing credit card debt and all kinds of other kinds of debt. And here we are continuing to face the situation. It's a bigger conversation too. Certainly the pandemic makes it difficult for maybe students to pay it back, but it also speaks to the high cost of education and what is required of so many students in order to pay for it.
And I wonder how much of that is going to become a hurdle for a lot of people who do want to get graduate degrees or master's degrees. Is simply the interest rates that you have to pay to get that additional education. Is it really worth it? And that's going to be an even harder question to answer in this new environment.
And this was something certainly the Obama administration, right, spoke to in terms of like, if you get this kind of degree, here's what you can expect to do professionally, and here's maybe the money you expect to do, and just think about that when you're taking on debt. But anyway, the president and the administration taking another step to help out those impacted by the Omicron variant and COVID overall. You're listening to Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Under 13 minutes to go until the closing bell. The equity market is higher right now, very near the best level of the day. We've had some positive news when it comes to the virus. Two studies, one in Scotland, the other in South Africa, both finding the risk of hospitalization from the Omicron variant is far below the risk when a person is infected with Delta. We also today had the FDA issuing an emergency use authorization for Pfizer's antiviral tablets. Meantime, the FTC is said to be pushing forward with antitrust scrutiny of Amazon's cloud business. Separately today, and a bit earlier, Amazon's cloud computing unit seemed to suffer a new outage, at least the third this month. Amazon shares right now trading a bit lower, down just fractionally. Let's call it 0.1%. The Dow higher by 0.6%. We've got the S&P ahead 0.8%. The Nasdaq comp rising about 0.9% at the moment. Shares in Tesla are rallying. CEO Elon Musk has sold enough Tesla shares to reach his target. He wanted to reduce his stake in the company by 10%. Tesla right now higher by nearly 7%. In the bond market, 10-year Treasury yielding 1.45%. I'm Doug Krisner, and that is your Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just about 10 and a half minutes left in today's trading session, and we do have, again, low volume today, but nonetheless, we are seeing some gains in those equity averages. Let's get to it with Leo Kelly, founder and CEO and CIO at Verdance Capital Advisors, and he's based in Baltimore, and we find him on the phone today from Hunt Valley, Maryland. Hey, Leo, how are you?
I am well. How are you?
Doing okay. Counting down, getting ready to wrap up this year. I'm kind of ready to put a bow on it. So, I don't know. Are you anticipating that we continue? I mean, it was quite a remarkable year in terms of the equity trade, and we still have, bonds. It looks like that 10-year is going to easily, finish below that 2% mark. How does 2022 look like it's setting up?
2022 looks like a continuation, I think, of a transformative year, right? Which is what 2021 was, coming off of COVID, or more importantly, coming off the greatest economic anomaly in history. And so I think, obviously, a lot of surprises, a lot of volatility. I think the volatility increases next year. And for 2022, our belief is we continue to transition away from that which has worked easily for a decade into what the next wave of the market is, right? Which is this inflationary environment. We think finally ending the secular bull market in bonds and a transition to a more actively managed environment for investors.
I want to ask you a question that I've been dying to ask someone who's in the know of markets. When you look at what the bond market is pricing, they are looking at on the surface, when you look at the dot plots, we're looking at 3 hikes in 2022. But when you look at what the bond market is pricing, they're looking at not necessarily multiple hikes, but one big hike and then kind of slower reactions. It's kind of like a faster but quicker, or faster, I should say, a steeper hike, but a quicker kind of hit to the markets, perhaps, rather than kind of slowly making your way up there. That's what the bond market seems to be perceiving, kind of this knee-jerk stop and start reaction. Is that the way to go for the Fed? Do you think that's how that'll play out?
Yeah, I think the Fed, it's interesting. I was having a conversation today and I heard somebody say, well, the Fed's getting hawkish. the Fed is barely becoming less dovish. And that's the important distinction here. I think the market continues to look at the Fed as an automatic put on the market and a protector of asset values, right? The third mandate of the Fed, protect asset values. And so I think the market
is convinced that whenever there is any form of economic stress or market stress, the Fed will cease its operations and will fall back into its extremely dovish nature. They've been doing it. That has inflated asset prices, and the market continues to be convinced they will. It is illogical to have inflation running at 6-7%, to have GDP growth running at 6-7%, and have a treasury, a 10-year treasury at 1.4. Clearly,
who's got it wrong?
Yeah, I honestly, I think right now what you're seeing is, I'm going to go back to my commentary of the anomaly. I think that if the market didn't have so much capital flushing around the system, I mean, we've just poured literally trillions of dollars into the marketplace, and we're expecting the bond markets and the financial markets to function whatever normal is normally. That's not going to happen here. There's just too much money. And we're starting to get the bifurcation of behaviors in the marketplace between the U.S., which is now starting to tighten, and the rest of the world. So we have Europe, which is not tightening, and China is actually getting looser. And so what does that do? That creates more demand. So we have two huge buyers. We have international buyers, and we have the Fed buying treasuries still at an enormous pace. That's putting artificial numbers on the bond market. That can't go on forever, and the result is inflation. It's here, it's not transitory, and it's staying.
Okay, so as you said, you think it becomes the ending of the secular bull market in bonds and more actively managed investing. So you are an active manager, right? Like, you've got to be putting money to work, figuring out the best ways, especially for your high net worth client and those assets that you've got on tap there. So where do you put it, Leo, or where are you placing it?
Yeah, inflation isn't necessarily bad, and a great hedge for inflation is stocks, more specifically traditional value stocks, and stocks where earnings can grow in excess of compression declines, PE compression. So if these growth stocks, which have worked so well for the last decade, they're seeing multiple compression. PEs are going down, right? Because interest rates go up, those multiples go down. It's hard to make money there. But there's the rest of the market which can do well, whether it's in industrials or commodities or financials, especially. Small caps tend to do well. International markets should do well because their monetary policy is going to be much easier than ours. So there's opportunities there in a market where we have easier monetary policy and lower valuations, because those markets haven't come up as fast as ours. I'd also tell you in our family
But if there's
office,
growth, but if the growth is still in the U.S. market, if that's where we see the outperformance, does it continue to attract assets?
Again, everything is relative to price. So this growth has been priced into the market for quite some time. And so the growth has to be in excess of the already priced in numbers in the marketplace. So growth stocks, just look at the stay-at-home stocks, right? Look at the stay-at-home stocks, which would never come down, and they were the quote-unquote new paradigm because behaviors would change forever. Now, those are still great growth stocks. They're still growing earnings at a very good clip. This just price got ahead of, they got ahead of the reality because everybody was overestimating the impact of stay-at-home and COVID. You're seeing that in the broader market as well. And so there are plenty of undervalued assets. And what I was starting to say is, in our family office, we're doing an awful lot in the private markets. The valuation between public and private is actually getting wider and wider as the market tends to get a little speculative as valuations run up. So there is, 2022, there are places to put money. I think cash is a great place to have money because volatility will increase. So have dry powder, but don't be afraid to put money into those inflation hedges.
Well, inflation hedges, the stock market. Let's really quickly just talk, I think we have about 30 seconds here. Very quickly, I want to talk about those growth stocks, which I recently was told tend to outperform when growth decelerates. That's something we're hearing about 2022. What's your take?
Yeah, growth decelerates, but it decelerates from an artificial high. Somebody has a heart attack and then you hit them with the paddles and their heart starts beating fast. sure, that's a rapid growth, but as they settle back into the normal heart rate, that doesn't necessarily mean the deceleration is traditional. So we had a complete shutdown. We had this massive run-up. Now we're settling down into normal growth. The consumer still has a lot of cash they want to spend. They just don't have anything to spend it on at the moment. As that gets corrected, I think you still have growth next year.
All right, Leo, Happy New Year, Happy Holidays, be well. Leo Kelly, founder and chief executive officer at Verdance Capital Advisors, joining us on the phone from Hunt Valley, Maryland. All right, we've just got a few minutes left in today's trading session, and we're seeing stocks tick to their best levels of the session. So we're looking at about a 1.1% gain on the NASDAQ. It is time to head over to our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, TV, and YouTube. We're counting you down to the close.
Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And we're about 2 minutes away from the end of the trading day. Caroline Hyde, Taylor Riggs, and Shonali Bassett counting you down to the closing bell, here to help us take us beyond the bell with global simulcast. We're joined now by Carol Massa, Kriti Gupta, bringing together Bloomberg TV, radio, YouTube audiences to go through what has been actually a risk-on feel, maybe that Pfizer news, the new ways in which we can treat the COVID-19 outbreak, particularly Omicron, front and center for investors.
Yeah, absolutely. It does feel like every day, right, guys, that we get another tool for dealing with COVID and finding our way forward. It's interesting to watch in the last few minutes of trading here that we're just, Kriti, ticking to our highs of the session for the S&P, the Dow, and the NASDAQ.
Absolutely. Cruise control is really the name of this game today when you're talking about whether investors are even looking at investing in stocks. But look at what is trading under the hood. It's very much a defensive trade that is still outperforming. You are seeing the NASDAQ outperform the S&P 500. That's going to be crucial to see if that pattern sticks going into next week.
Isn't it funny?
Taylor?
Everybody says growth stocks we should run away from, but yet NASDAQ continues to outperform.
Yeah, you know, it's so interesting. And I know that Shonali, and later when we take a look at some of the sectors, it's been the discretionary that's really caught our attention, and something that's coming with the higher consumer confidence data, and then a slight downtick in some of those inflationary readings. And we just had a great guest, Carol Schleif of BMO Family Office, saying that some of these maybe inflationary readings have peaked, and so we might be in a better position perhaps if they haven't.
Yeah, absolutely. We have those reopening trades really back in full force, but you have to wonder at what point that the other retail names start to feel the same amount of love that we see as this consumer comes back.
Interestingly, Tesla getting some love. We'll be digging into the individual movers, but right now it has been a volume down but market up kind of a day. And indeed, once again, S&P 500 moving more than a percentage point. I mean, I think it's been 11 out of the 18 trading days since Black Friday that we have seen such moves in excess of a percentage point. S&P 500 closing 47.5 points higher, 4,696. The NASDAQ up more than 1.1% and 180 points higher. And the Dow getting a little bit of love, less so. The cyclical's not quite so in vogue today, up 0.7%, 261 points higher. The Russell 2000 as well, a slight laggard versus the S&P and the NASDAQ. We're just rising on the day. 2,221 is where we close, about 0.8% higher, Carol.
Yeah, and let's not forget, you mentioned, you know, in terms of the highs that we saw, and it is lighter volume, but we did get some economic data earlier in the session about housing data that was upbeat, and also consumer confidence coming in better than expected for the month of December. So, Taylor, all of these little points give support, certainly, to the equity trade.
And those one-year inflation head expectations, Shonali, coming down, helping to fuel some of the sectors I know that you're looking at.
Yeah, I mean, some of these sectors really are all higher on the day, so we're not seeing that some are being left behind as we move along.
Look into some of the industry groups for a moment with us, because, I mean, consumer discretionary was where it was at, hey?
Yeah, absolutely. A more than 1% rise in consumer discretionary. And we had healthcare right behind it, really. Those consumer discretionary stocks led higher by that Tesla jump that we've been talking about.
Look how autos have outperformed.
Yeah, incredible. But look at that. I mean, with more than 6% higher there.
I thought he was done, but then Elon Musk came out and said that he's almost done. So is he not?
He's such a tease. He's such a tease. Let's not steal Carol's thunder.
Oh my God.
She's got it, isn't it?
I was just going to say, it's one of my gainers.
I mean, look at how little of a rise you have in some of those other sector groups. We're all green on the day, but we don't have this broad-based jump up as we see with those single-name stocks driving up some of these sectors.
Yeah, absolutely. All right, let's get to some of the gainers of the day. I'm going to get to Tesla in a moment. I got to talk about Pfizer because this was certainly a headline we focused on today. Moving up on the news that its at-home antiviral pill given emergency use authorization by U.S. regulators, and this is, of course, to treat COVID-19. This stock is up more than 60% so so far this year. It's up about 1% in today's trade. Tesla, we're talking about it a lot when it comes to those consumer discretionary. So Tesla at the top of that list, up 7.5% in today's session, $1,008 and change. Top in the S&P 500, top of the NASDAQ 100. Keep in mind that Elon did come out and say that he's, I guess, close to selling off all the shares he needed to do. And this stock, it's been on a tear this year. We did see, though, a pullback when he was doing all of that selling, but nonetheless, we're seeing investors come back in. And I got to mention Carnival. So many of the hospitality stocks have been on a tear the last couple of days. Carnival adding another 3.5%. It's up about more than 20% in the past 4 trading days, top of the S&P 500. Keep in mind, it was on Monday that the company was looking into the new year, saying that it expects to see a profit in the second half of next year. But it's interesting with all of the variant and COVID headlines that we continue to see creating a lot of gains in the hospitality and leisure sector.
Absolutely, in the hospitality and leisure sector, but not so much perhaps in some of the sectors that have actually been outperforming lately. I wanted to look at some of the decliners today, and at the top of the pack is, of course, going to be CarMax. Now, we've been talking about used cars and how those prices have been surging, rental cars as well, and now you're actually looking at CarMax and their earnings, blowout earnings, really great numbers, but then you look at their margins, this idea that they are charging higher prices, but then to store that inventory needed to actually replenish that supply that's being selling out so fast, well, that's cutting into their margins. That's those storage costs really weighing on the shares today. I want to hit Moderna as well, dropping this, of course, Carol, in reaction to one of your stocks, Pfizer, essentially getting clearance from the FDA. Now Moderna actually sinking to session lows on that headline, because remember, when people want that exposure to biotech, they pick Moderna, they pick Pfizer, and it tends to be a trade-off between one or the two. I'm going to wrap it up here with Amazon.
Should he gloss over Amazon? It closed higher.
I was just going to say, if Romaine was here, he would be giving you a hard time.
Oh, he would be. Man, I
Never
was
invited
so
back.
close. But it really speaks to the idea that antitrust scrutiny, is it an issue for the stock market or for some of these big tech companies? We've seen in the past that a lot of those big tech investors, well, they look straight through it, and looks like Amazon just did the same thing.
It was down more than 1% earlier in the session, to be fair.
I promise you guys, it was a decliner at one point.
A Bloomberg scoop because of that. Of course, the FTC eyeing up parts of Amazon, the web services are part of the industry. It would seem about the shares just managing to bounce off their lows. I'll tell you what's also in the higher side is basically most currencies versus the US dollar. We did not need the haven trade. As the risk-on music came back in, we saw the fact that we got the Aussie dollar catch a bid up 0.9%. Some of these commodity-related pairs doing well. British pound actually up 0.7%. Economic data there looking pretty rosy. In terms of the actual size of the economy, not quite as dented by COVID-19 as many had anticipated. The Office of National Statistics, to get my words out, they're saying actually the economy is only about less than 2% smaller than it was in 2019. Canadian dollar goes higher as oil goes higher. Let's have a little look at the commodities space, because WTI crude up 2.5%, still sub $80, but it's $72.92. That as the inventory levels coming in lower. There's some of the supply side being an issue here in the United States as we get that IEA reading. Brent crude up more than 2% at $75. So clearly a little bit of a bid into some of the metals. Zinc up 2.8%. And sovereign bonds, a mixed picture there, Taylor. Taylor, take us through what happened in the United States.
Oh, Caroline, unch on the day. So boring. No one cares. No one listened to the bond market today. So here we'll just quickly bring you through it. No movement here, but maybe the stability is something that we can take our cues from with the good economic data. I know that, Carol, you've talked a lot about this morning, a Federal Reserve that is still on steady and on track to maybe complete that taper by March, and nothing really any newsworthy to sway this market in either direction.
What's interesting too, and Taylor, you were earlier on television talking about, here we are though at the end of the year, and that 10-year yield is still below 2%. How remarkable, considering I feel like we talked to a lot of market folks, we talked to CEOs. There's optimism going into the new year, and yet I'm just shocked that we haven't kind of pierced that level.
And Janelle, let me just quickly jump in here. We had Carly Garner on of DeCarly Trading at around 3:15 or so, and she said she's not crazy in thinking that it'll hit 1% before it goes back up to hit 2%, in part because of all the technical rebalancing. Everyone is so overweight equities that what happens the minute you rebalance and you get a flood of buyers?
Yeah, it's a great question, because we know how sensitive this market is to that extremely low interest rate. And the question is, how quick do you then get to 2?
And what deals are being done off the back of that? Interesting that Blackstone, talking about doing some sales of in its portfolio, but it does feel there's been a little bit of merger action towards the end of close of the year, it would seem, and whether therefore companies still awash with cash, wanting to know how to put it to work at the moment, Kriti.
Yeah, and Caroline, when it talks about really what the next catalysts are, I mean, yes, that's absolutely a component, but don't forget, we also have plenty of eco data, even on this kind of holiday thin trading week. Even tomorrow, we have initial jobless claims, the PCE deflator, Michigan sentiment. I wonder how much of that will actually play into the market, if at all, Carol.
Well, I think what's going to be interesting, you're right, there's a slew of economic data tomorrow, and we will get some good reads, including, as you said, PCE, and certainly that is something that's watched closely by the Fed. Does it just confirm kind of the story that we're in? I mean, right, Taylor, everybody's like, we know we've got inflation, so do we get just another number that confirms it, or does it show any kind of weakening that maybe could start to build a new trend line?
Yeah, any weakening, of course, given the concerns of some of this virus and the variant that we've been talking about, except the CES is in person in Vegas.
Yes.
So see you later. I'm going to Vegas.
But not everybody's going, right? Some of the big tech names have pulled out.
Fair.
And they're pretty good at virtual events, right? I mean, if you're a big tech company. Interesting that they've decided to stick that. Davos has been made virtual only, some of the other key healthcare conferences, but clearly in Las Vegas, they feel the party can ride on.
Let's go to Vegas.
All right, let's go to Vegas. Well, I'm not going to go to Vegas, but I'm going to be home for the next week or so. So Merry Christmas, Happy Holidays, Happy New Year. Everybody stay safe, and I'll see you in the new year. All right, that's going to do it for our cross-platform coverage on radio, on TV, and YouTube. Catch us again, same time, same place tomorrow.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, you are listening to Bloomberg Business Week. Carol Massar along with Kriti Gupta, and fun to check in. I do feel like we're all getting like, all right, the last couple of days, it's been the same old stuff. We've got a lot of economic news. We'll see if that does anything in terms of catching someone's attention, changing the narrative. But I think, once we get into the new year, it's going to be earnings season starts, and then we'll be counting down the next Fed meeting, right?
Oh, absolutely. Although I am curious how much of this kind of new Omicron variant is actually really being taken seriously. Are you starting to see people actually stay at home, work from home more, or do they say, no, we're going to go on with our lives, we're going to go see those movies?
Right, exactly. And what parts of the economy start to see a scale back, right? Obviously, if you're working from home, you're not out buying lunch somewhere, you're not doing some shopping at stores, which makes my husband really happy. But having said that, there are things like trips that you don't take, you can never get them back, right? So there is an economic impact, and I don't know, it might be weeks before we have a better idea in terms of what's going on. Having said that, we mentioned CES, the Consumer Electronics Show. This is a massive show. I haven't been there in years, but I used to go. It's where everything and everybody goes, all things technology. Well, the Consumer Technology Association pushing ahead with plans to host the annual CES Tech Conference in person next month in Vegas, despite cancellations from several major tech companies and exhibitors. And we've talked about some of the companies that have already pulled out. Amazon.com, Twitter won't be going. And I think T-Mobile and Meta Platforms have also curtailed their plans to attend the gathering in person. So pulling back.
Yeah, and they're being very, very cautious. Of course, this follows news that you had JP Morgan's very famous healthcare conference. Even that is being taken virtually online. You do have, I believe Walmart was coming out and saying that as well. They're not actually going to be attending some of these conferences as well. So big corporate names, big banks, they're taking this very, very seriously.
What's interesting too, and I wonder about this, Kriti, that because we understand how this can play out and how numbers can go up really quickly, that we understand, okay, maybe I stay home right now for a week, maybe 2 weeks, but that means I can maybe come back sooner rather than if we ignore it and those numbers really get out of hand and then we're home stuck for another month or two or even more, and the economic impact diminishes. You're not flying anytime soon?
I am not flying. I will be staying at home, just me and my puppy. It's going to be a ball. Sounds like good. I do a lot of streaming. That would make me really happy. I'm very happy. I don't know if you've noticed, but there have been a lot of shows that have been launched right during this time.
All right. Speaking of watching things, you're listening to Bloomberg Business Week. Carol Massar along with Kriti Gupta, and we were just talking about staying at home. I have to say, I kind of hope it gets cold. I'm going to be home with my family, my dog, and I've got lots of movies. My daughter wants to watch Harry Potter again, the whole series. We've already started. Having said that, our Bloomberg Intelligence team has been out with some research on the domestic box office, and they're saying it's going to ramp up in the third quarter and fourth quarter. So domestic box office sales have ramped up slowly but steadily on steady release of films, as well as rising COVID-19 vaccination rates. But 2021, largely a transition year, and may fall 60% short of pre-pandemic levels. That's a lot.
That is a lot. But what's interesting in talking about kind of the box office here is just the massive success that Spider-Man No Way Home actually had. This massive...
Have you seen it?
I have not, but it must be good because, I mean, Zendaya's in it, so it has to be.
Right, and she's dating Spider-Man.
She's dating Spider-Man.
They're such a cute couple. I just saw them on Graham Norton. I don't know if you watched. They're adorable.
There's something about being on the Spider-Man cast. I just got to say that. That being said, I loved the Tobey Maguire original.
All right.
Loyal to it.
No. I like the new guy. But they did talk about Spider-Man being such a big success, been a shot in the arm for the domestic box office, which has had a very uneven recovery. Box Office Pro now expects $2.2 billion in fourth quarter sales, 7% higher versus its prior estimates. And it does have to do with, I think, the movies that are out there. We've seen a lot of movies come out, or it goes straight to streaming. Yeah. It's been complicated.
They're really navigating it, and this is especially when you're talking about movies where they should be hitting the box office at all. This was a major issue with Scarlett Johansson, that had this major issue with Disney and her pay and how that was really calculated. And now you're seeing a lot of streaming companies, especially right now, I should say, looking to launch some of those new shows during the holidays in January. Very nice timing for someone like me who will be in their studio with their pup.
We're all going to be home, right? It makes no sense. And they saw how that can pay off during the pandemic, how people rushed, some of the streaming services rushed to get content out because they know they had all these eyeballs. All right, folks, you are listening to Business Week on Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
So the equity market advanced today and finished near the best levels of the session. We had positive news on the virus. That's kind of where the day began. Two studies, one in Scotland, the other in South Africa, both found the risk of hospitalization from the Omicron variant is far below the risk when a person is infected with Delta. And then add to that an emergency use authorization from the FDA for Pfizer's antiviral tablets. The FTC is said to be pushing forward with scrutiny of Amazon's cloud computing business, and this news comes on a day when, earlier in the day, Amazon's cloud unit seemed to suffer a new outage, at least the third this month. Shares in Amazon today, interestingly, finished higher by about 0.4%, although shares had been on the back foot through much of the session. At the end of the day, we had the S&P higher by 1%, the Dow Industrial Average rising 0.7%, and the NASDAQ comp picking up about 1.2% on the day. Shares in Tesla rallied by more than 7.5%. CEO Elon Musk said he's almost done selling shares to reach that target of reducing his stake in the company by 10%. At the same time, U.S. regulators have started a new probe into a Tesla feature. It could allow drivers to play video games on a dashboard screen while the vehicle is moving. What could possibly go wrong, right? 10-year Treasury last quoted in New York at a yield of 1.545%. I'm Doug Krisner. That is your Bloomberg Business Flash.
All right, Doug, thank you so much. Well, safe to say it's the end of an era at the Walt Disney Company, officially wrapping up at the end of this year as longtime CEO Bob Iger, who transitioned out of the top spot back in 2020, becoming executive chairman at the time. Well, he leaves that position at the end of this month, and he's going to leave behind a company that is definitely going through some growing pains, some transitioning big time, and a stock that's really struggling. So let's get to it with Bloomberg News entertainment editor Chris Palmieri. He joins us on the phone in LA. Chris, so good to have you here. With Creedy and myself, it really is the end of an era.
Yeah, it is. You know, this has been coming for so long. Bob Iger postponed his retirement 4 times. We saw a lot of sort of would-be heirs rise and then fall. And then they did this unusual situation where he stayed as executive chairman for almost 2 years. So this has been a long time coming, and that's kind of what made it more surprising that there's still kind of all this turmoil and questions going on and when the handoff finally happens.
So walk us through it, Chris. Exactly what are the implications? What are the hiccups here that Bob Chapek, I believe, is going to have to inherit when the other Bob leaves?
Well, number one, there's a bunch of things he really couldn't help. Number one is the pandemic, of course, and it's
talk about timing, right?
Yeah, he took over literally just a week or two before everything really started to shut down last year, and has had to cope with the theme parks being shut, TV and film production, cruise lines, no sports. I mean, just everything you could imagine. But that said, there have been some things you could argue are sort of self-inflicted. He's made himself very unpopular inside Disney for a lot of organizational changes he's made. Moving all the theme park employees to Florida from California, for example, has not made them very happy. He's reorganized the structure so that all the TV and film executives now report to a new distribution unit headed by a longtime sort of protege of Chapek named Kareem Daniel. So basically, anytime anybody wants to greenlight a movie or decide where a TV series goes, they have to go to Kareem for approval, which undermines their autonomy. And there have been some other high-profile dust-ups. This lawsuit from Scarlett Johansson over her pay a few months ago did not cast Disney in the best light with regard to talent relations. So those are some of the things. Oh, and the biggie, of course, is also the Disney Plus streaming service, which got off to such a huge start, well over 100 million subscribers initially, and then recently has started to slow down. And how he's going to get that growing again is going to be a big focus for 2022.
So, okay. I think about, you and I have talked about, you've covered Disney for a long time, and we've talked about this company a lot. I mean, Bob Iger was really well respected in terms of kind of creating these different pockets and brands throughout the company, whether it was ESPN, whether it was Pixar, right? It was just the different divisions, Marvel, and kind of letting them do their own thing, but creating these incredible synergies, whether it was in the theme parks, whether it was up on the big screen, whether it was in merchandise. But is it going to continue to be does it have to be a very different Disney going forward? Does it continue to have those synergies and so on?
That's really an excellent point, is that Iger was sort of recognized the value of the talent and this content that they created, the movies and TV shows. And so he sort of supersized everything Disney was doing with those acquisitions of Lucas and Marvel and Pixar. And now the focus is so much on streaming. You know, you're seeing the theater business sort of in a way melt away, and traditional TV melt away. And so Bob Chapek has really tried to refocus everything around this one giant business, which, you know, is a very different kind of strategy than what was done in the past.
Although, to be fair, right, Chris? I mean, ESPN was a juggernaut for so long.
Huge. I mean, that used to be the thing that would drive Disney stock price. You know, there was a time when it was the largest single business within Disney, and that's no longer the case. You know, it's like all traditional TV is seeing fewer cable subscribers and fewer overall viewers.
So what does the future of streaming really look like? Because I'm just looking this up here. What does Disney own in addition to your ESPNs, your Hulus, your Marvels? You also have ABC and the History Channel. I didn't know they own the History Channel. So talk to us about streaming.
You gotta expand out here.
I know. I love you, but I grew up with. I was a Disney child, so beyond Disney princesses, sometimes I'm just like, wow, they own that. They own a lot.
They do everything, yeah, from Winnie the Pooh to the Muppets. I mean, they're just our whole childhood. History is through a joint venture with Hearst Corp, A&E Networks. But all those traditional cable channels, I mean, that was the thing a few years ago. They were great growth engines because they got lots of subscription money from, everybody paying their $100 cable bill every month, plus ad money and whatever else they could do. Huge growth business, and that's in decline. And they've been shutting down cable channels all around the world. Disney Channel UK, for example, as everything migrates to really just three big services. It's Disney's strategy, and it's Disney Plus, Hulu, which is kind of general entertainment, and ESPN Plus for the sports.
Well, interesting. It's always a fun company to follow, and it's got so many different moving parts, but definitely going to be, it already is, a very different Disney going forward. Chris, be well. Happy holidays. Happy New Year. Chris Palmieri, entertainment editor at Bloomberg News, on the phone from LA. I'm just giving you a hard time. It's got a lot of moving parts. And he's been, Iger was always good about, kind of integrating them across. You're listening to Bloomberg Business Week, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So if you had to name a tech trend for the new year, do you have one on your mind?
A tech trend for the new year. I'm going to go with streaming because as we all kind of work from home potentially for the next couple of weeks, I imagine Netflix will be getting a lot of heavy volume.
You're thinking about jammies and your puppy and streaming. I know what's going on.
Very excited about it.
All right, we're going to check in with the chief futurist over at Deloitte in just a moment for some of the trends to watch out. In the meantime, let's get back to Doug Krisner with a check on that trading day. Hey, Doug.
So ask about AR, VR headsets. I think that...
I will.
Okay.
You ready for the metaverse?
No, not particularly.
Okay.
I'm not even ready for Christmas for crying out loud. Okay, let's get to today's price action. A couple of positives. We have to begin with the numbers on previously owned home sales. Consumer confidence, both data points showing strength of the American economy. And then if you look at the coronavirus situation, some positive signs here as well. Two studies, one in Scotland, the other in South Africa, both found the risk of hospitalization from the Omicron variant. It's far below the risk when a person is infected with Delta. And then that moves into the FDA story, issuing an emergency use authorization for Pfizer's antiviral tablets. Pfizer shares today were up about 1%. Now, we are learning the FTC is pushing forward with antitrust scrutiny of Amazon's cloud computing business. Initially, this adversely impacted Amazon shares, although they ended the day higher by about 0.4%. Overall, the equity market getting a lift. Tesla shares out in front of the advance of the S&P. Stock rallied by 7.5% today. CEO Elon Musk said he's almost done selling shares. He wants to reach that target of reducing his stake in the company by about 10%. And as I mentioned, Tesla up 7.5%. It's part of the consumer discretionary group. Consumer discretionary leading the S&P to a gain of 1% today. NASDAQ comp up 1.2%, and the Dow higher by 0.7% today. Light volume, but a lot of activity. I'm Doug Krisner. That's your Bloomberg Business Flash.
Yeah, Elon Musk, 49 minutes ago, saying there's still a few tranches left, but almost done. It's just fascinating how he communicates with us. All right, well, now in its 13th year, Deloitte's Tech Trends report summing up the trends that are most likely to impact businesses in the next 18 to 24 months. This year, that includes cyber AI and the tech stack going physical. So let's get into it and into this report with Mike Bechtel, his chief futurist over at Deloitte, on the phone in Chicago. Mike, nice to have you here with Creedy and myself. Talk to us about this report. 13 years. How do you put it together? Who do you talk to?
Well, Carol, Creedy, thanks for having me, and happy holidays to both of you.
Yeah, you too.
Thank you kindly. We operate over the last 13 years under this well-worn quote in the emerging technology and futures biz that the future is already here, it's just not evenly distributed, which is to say nobody's got a crystal ball. Nobody can look into the future. If they can, give me a call. But what we do instead is we look around the world at the adoption of new tech, right, at leading-edge, pioneering clients that figure to become normal for everybody else in the next 18 to 24 months. And so when we talk about projecting the future with our tech trends work here at Deloitte, we're not really predicting so much as we're taking field notes from around the world and figuring out what stands to become commonplace.
I'm fascinated what you found. Talk to us about the trends that you find, perhaps the ones that you think might lead in the new year.
Yeah, for sure. So this year we've uncovered 6 trends that really look to shape the face of business, of enterprise, of big organizations you've heard of in 2022. 3 are sort of front of the house. Think of them as ecosystem trends, the ways that organizations are doing business more effectively, more efficiently, a little more future facing than they used to. And 3 are back of the house. These are real changes to the way that technology organizations and IT departments go about their basic blocking and tackling. Up front, there's stories around data, around cloud, and around blockchain. And at a really high level, I would tell you all 3 of these are stories of these 3 concepts we've heard of, sometimes too much, growing up, like passing through the skepticism phase and into the ready for prime time phase. Happy to talk to you about any of them. Which one sounds interesting? Pick your poison.
Well, we listen. We talk about all this stuff all the time, and I think we're trying to figure out. We know the cloud; that's a big deal. We know there's robotics. We're watching the crypto world. What do you think that come 1 year from now, we might look back at 2022 and say, "Wow, this was a big tech innovation that really marked this year."
Yeah, I think let's lean into that blockchain piece a little bit. When blockchain debuted, 5 years, 10 years back, it had a bit of an image problem, right? It was this feeling of dark actors on the dark web buying dark things. And enterprises, right, big organizations like my clients, they were understandably reticent to jump in because it didn't feel like it was enterprise class. Well, what we're seeing right now, and to your point, a year from now, I think we'll look back and see that blockchain's really ready for business. You've got all the excitement around crypto and NFTs on the creator economy side, and that's great, right? I'm not dismissing any of it. But what we're seeing at our enterprise clients, right, at big businesses you've heard of, is this idea that it's becoming merely very useful for basic supply chain things. I mean, COVID, right? The philosopher Mike Tyson, said everybody's got a plan until they get punched in the mouth. Well, COVID punched a lot of supply chains in the mouth, right? Folks trading their fetish for efficiency for resiliency. Blockchain stands to create a whole lot of new opportunities for folks to track, to trace, and frankly, to trust the information between counterparties. So I think we're going to look back and say, this was the year where blockchain turned the corner from hype to honest to goodness business hope.
I'm curious about, we're talking about blockchain and how aggressively it's kind of rising, whether you're talking about through NFTs or whether you're talking about through a kind of fintech technology, which is also, you've seen a lot of major banks start to embrace blockchain in that regard. I believe there's also real estate helping in New York City meant to kind of help with that infrastructure. What is kind of the signal that we can really maybe look towards to when we can say, okay, blockchain is now a part of our regular lives? How far away is that?
Yeah, it's the gotcha and the tricky piece with emerging technology predictions is always the time frames. But what I'll tell you is the kinds of organizations that are beginning to move from proof of concept to real deal use cases for blockchain, they're becoming more in the way of household names. We spoke to a Chinese Hong Kong-based jeweler called Chow Tai Fook that's laser engraving diamonds and throwing the 4 C's, clarity, cut, carat, whatever the 4th C is, into a blockchain in joint concert with the GIA. The idea being that, would you rather trust the appraiser down the street, or would you rather trust the blockchain? This idea that maybe none of us is as trustworthy as all of us. Now, that's one thing to say a Hong Kong jeweler thinks it's legitimate, but the United States Department of Treasury is actually starting to use blockchain as a means of tracking grant writing and grant funding. And, this is an organization that, isn't necessarily incented to be, pioneering and way out in front. And so the idea really is, as ever more household names begin to say and raise their hand, hey, this is merely very useful, then I think we as business folks, as investors, as civilians can start to feel like this is right for prime time.
And it's cut, color, clarity, and carat weight, just in case you were wondering. The 4 C's. No, but I get it.
For the holidays,
I know, exactly. But I get it for something like that. Blockchain makes a lot of sense to me in terms of keeping track of intellectual property, certainly in a legal sense. You can see the value in that, certainly in a big way. So I can see it, definitely playing out. I don't know. Innovation continues. 30 seconds, digitization. This is all something we continue to see, just quickly.
Yeah, from the digitization standpoint, one of our big recognitions this past year is that COVID didn't really create new trends as much as it sped them up, right? We've seen our clients take 10-year plans and execute them in 10 weeks. And so, whether it's this, as I heard one of your prior guests call the stay-at-home economy, whether it's streaming services, metaverse, et cetera, above all, there's this recognition that as much as we talk digital, we're still in the earliest days.
All right. Listen, Mike, have a good new year. Nice to check in with you. Mike Bechtel, he's chief futurist over at Deloitte on the phone from Chicago. Coming up, I think it's the most read or one of the most read stories on the Bloomberg. We'll get to it in just a moment, right here on Bloomberg. All right, you're listening to Bloomberg Business Week. Carol Massar along with Kriti Gupta. I love this story. It's about someone who was, I guess, the secret bidder for a spaceship seat on one of Jeff Bezos's Blue Origin flights.
Oh, man.
Not
Jeff
you,
Bezos
right?
again.
Wasn't you, right?
It wasn't me, I will say. Maybe it was you. Maybe it was our secret Santa, Carol.
I would definitely do it in a heartbeat. Justin Sun, the technology and cryptocurrency entrepreneur, recently announced that he is a diplomat for Grenada, said he's going to space on a Blue Origin flight next year, will invite 5 people to join him. He's 31 years old, revealed himself as the anonymous bidder who paid $28 million in an auction for a seat to join Jeff Bezos in Blue Origin's first crewed mission in July. He had to reschedule due to a timing conflict, but nonetheless, he's going to find himself on a future trip.
Can I just say, out of
anything.
pure curiosity, how do you reschedule or need to find another time to take a spaceship to space?
What do you
or
mean?
A trip to space?
You mean like you said, like you messed up the scheduling or what?
No. Like, was he like, oh, I just don't have time to go to space this week. Maybe I'll go next week. I'm wondering how that plan panned out.
I don't know why. He said he had to
Very
reschedule
curious.
due to a timing conflict. So
I'm going to trust him. I don't mean to give him any flack for it. I'm just very curious.
Jeff, I still want to go, but can we do it in July?
Please.
But it's interesting. What I marvel, and folks who listen to Bloomberg Business Week already know that my dad was an aeronautical engineer, an electrical engineer, and he worked on a lot of early space missions, so we grew up with this. He would marvel. He's not around anymore, but he would marvel at just the frequency of flights of just regular human beings, individuals, not astronauts, getting ready for months and months and months, just going up into air, and the idea of space tourism.
It's kind of incredible to think that there is one day, I mean, I'm not even saying this like facetiously, there is one day where you and I could very easily go up and it would not be a big deal.
Right.
And perhaps maybe not in the next, I don't know, a couple of years, but perhaps in the longer term, that is something that could be on our radar.
Maybe I can use my frequent flyer miles.
Maybe.
I don't know. We'll
that
see.
loyalty program.
Exactly. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
There were a few positives for the equity market today. First, the economic news. We had numbers on previously owned home sales and consumer confidence, both indicating strength, and then positive signs when it comes to the Omicron variant. Two studies today, one out of Scotland, the other from South Africa, and both found the risk of hospitalization from Omicron is far below the risk when a person is infected with Delta. And then, at the same time, the FDA issues an emergency use authorization for Pfizer's antiviral tablets. This would be for the treatment of mild to moderate cases in adults and pediatric patients. Pfizer shares today popped about 1%, but they finished off the best level of the day. Dow Industrial Average rises 0.7%. In the broader market, it was consumer discretionary leading the S&P to a gain of 1%. That is a Tesla story. The stock rallied 7.5%. CEO Elon Musk saying he's almost done selling Tesla shares. He's trying to reach that target of reducing his stake in the company by about 10%. But interestingly, at the same time, U.S. regulators have started a new probe into a Tesla feature. It could allow drivers to play video games on that dashboard screen while the vehicle is in motion. NASDAQ Composite today picks up a gain of about 1.2%. Apple shares moved higher. Analysts over at Citi were saying demand for Apple products and services could be resilient in fiscal 2022. Furthermore, Citi was saying that Apple's market value has failed to fully reflect new category launches, and that's expected to change with the AR/VR headset. Apple shares today jumping about 1.5%. In the bond market, U.S. 10-year Treasury last quoted at a yield of 1.45%. And the dollar a little weaker as we get set for trading in Asia. We had the Bloomberg Dollar Spot Index down about 0.5% today. I'm Doug Krisner, and that is your Bloomberg Business Flash.
All right, Doug, thank you so much. Well, don't tell anybody, Creedy, but I've been kind of counting down the hours to this story because I love it. It is among the most read on the Bloomberg all day today. And this reporter just writes one incredible story after another. It is also today's Bloomberg Big Take. It's about Wall Street wrapping up, a crazy year, one where they made lots of money and yet there's lots of angst. So let's get into the reasons why. Let's put this to Bloomberg News finance reporter Max Abelson. He is going to join us on the phone in New York City. And as I mentioned, though, Creedy, we should just remind everybody, I mean, it's been a pretty remarkable year in terms of profits for Wall Street.
A blockbuster year, and something that should really add to this disclaimer that, if you do start to see, say, a correction in the markets in the new year or in next week, it's coming with the background of such a huge run-up, but it's that kind of paranoia that is seemingly seeping into some of these investor mindsets.
Yeah, and we'll start to get a real read certainly on the big banks when they start to report. I think it's about kind of mid-January. We'll start to get earnings. I'm just looking up at JP Morgan. They'll start reporting on January 14th. So we'll get a read of, what the fourth quarter looked like, and we'll see what it has. As I said, this is our Bloomberg Big Take today about the crazy year that was on Wall Street and why everybody's kind of like, I don't know, a little uncomfortable about it all. Let's bring in Bloomberg News finance reporter Max Abelson. He wrote it. Max, so great. I really have been counting down the hours of our broadcast to get to you. You looked into what's been really a remarkable year on Wall Street on a lot of different metrics.
I did, and I just want to say to your listeners, if they probably get the sense that getting to talk to Carol Massar is really fun and is a really, really great part of being a Bloomberg News, and that is so true, and it's really how I feel. And Carol, I'll tell you that, in a way, it's a tough assignment because what I was trying to put my finger on for this is a zeitgeist that's not, it's not obvious. It's not as if everyone is completely miserable, and it's not as if everyone is completely joyful right now on Wall Street. Instead, it's this very interesting moment of on the one hand, huge profits at the big banks, Carol, huge, the biggest ever, and enormous bonuses, enough money, more money than many people will make in their entire lives, but also real angst and a real sense of unease. And what I did with the story is I spoke to finance veterans to try to understand why that is, and they have lots of interesting answers.
Yeah, Max, speaking of finance veterans, there's one in particular that I have loved and I've quoted him multiple times on radio today. But you interviewed, I imagine, J. Christopher Flowers, who used to run the Financial Institutions Group and now has his own PE firm. And I thought what he said was brilliant. He said Wall Street knows much of its windfall is coming from, quote, speculative nonsense. They have a, quote, a large element of baloney. I mean, to think about going into a new year with a portfolio that is full of baloney, basically, that seems nerve-wracking to me, and I'm not even an investor.
I am not an investor either. And listen, one thing that's fun about talking to someone like Chris Flowers, or J. Christopher Flowers is his full name, is that, it's cool to hear that people who not just, have spent their lives at the top of Wall Street, but in Chris's case, like, he makes money from investing in finance. Like, he's a private equity guy, but his specialty is the financial industry. So I found it like honestly, sometimes you're in interviews and you just kind of get you know what people are going to say, so it's like a little unexciting. But I was amazed when he said that to me, because it is kind of it's a little bit freaky to hear that people who really know what they're talking about get a sense of sort of existential worry that what's going on in the finance industry is, not that it's rotten and not that it's immoral necessarily, but I think what Chris would say is it's just a little comical. I think I can't come up with a better word than baloney, the one he used. It's disconcerting to hear that.
Yeah. Well, and I also, based on your reporting, Max, it feels like there's a lot of FOMO going on. I think about the story recently. I think it was by Sri Natarajan about, David Solomon, and I guess other people at Goldman looking to be able to tap into, I guess, other ways at the bank to get kind of a bigger piece of the action. Like, there's a lot of looking at what private equity is making or tech is making, or, kids trading Bitcoin and crypto and what they're making, and a fear of missing out.
I couldn't have said it better myself. And I think that as Wall Street reporters, we have to keep two things in mind at the same time. On the one hand, David Solomon is making millions and millions of dollars, and people at the banks are making, enormous sums. But on the other hand, they look around and see people who are making more than them. I think that it's KKR and Apollo that basically came out and said to their top executives, if you do your jobs, you're going to get, essentially $1 billion a pop. And David Solomon or Jamie Dimon are certainly enormously wealthy by any standard, but they're just not making that kind of money in a year. Even cryptocurrency, as Mark Gordon said to me, you look around and you see 18-year-olds making $20 million off of cryptocurrency, and you have to work to not be envious. And it's both things are true. Wall Street bankers are making a ton of money, and they look around and they see people making even more.
But this is also coming after not just 2021, where you've seen that speculative nonsense, as Chris Flowers would put it, because I'm cool now, I can call him Chris. If you look in 2020 as well, some of these big banks were making a lot of money off volatility trades, this very, very elevated VIX. And now that things are kind of calming down, it's a problem.
So final thoughts on this, just got about 30 seconds, Max. After doing this story, what's your takeaway here?
Well, I just to add on to that excellent point, it's not just volatility that is up. It's also the Federal Reserve has pumped trillions of dollars into the economy. And one thing that I heard while doing this reporting is that is going to eventually end. And what comes after that, we don't know. And it's going to be fun to be writing about Wall Street next year. We'll find out.
Rest up, buddy. You're going to be busy next year. No doubt about it. Max is always a must read. Max, Happy New Year. Happy holidays. Take care of yourself. Max Abelson, finance reporter at Bloomberg News, on the phone in New York City. It's really an incredible read, and it really does sum up so much of what's been going on Wall Street. I'm headed out for the new year. You're going to be sticking around covering the markets. You're going to have a lot of economic news and stuff to play with.
Lots of stuff going on tomorrow. Lots going on next week as well. Join us. Tune in.
All right, everybody, follow. Tim Stenvik's going to be back tomorrow as well. Stay safe. Have a happy new year.